Hey everybody, welcome back. We're going to jump right into it. So we can see the S&P. Here's our neckline. We can see we're back above it. We're still waiting for the head and shoulders to become that critical head and shoulders that it's supposed to be. Will it break? Will it not break? PCEs tomorrow. GDP came out. It was in line. Not going to waste a lot of time going over the obvious. We have a ton to go over tonight. What's going on with NEP? Why it could actually go lower? What's going on with tech? Why we're seeing it rally when people don't expect it to rally. We're going to dig into that. There's a lot going on and there's a lot of moving parts. We went over some of this in the public pre-market today. Nike after hours, how that could benefit retail tomorrow, especially names like ON, but let's just get into it here. And I appreciate your comments. These videos are going to start being just raw so I can get out the most amount of data as possible to you in the fastest amount of time. Now, you can see your neckline right there. You see your trend line right there. What we refer to this is points of confluence. So you have a point of confluence here and here. They connect. You have what I refer to as a kill zone. And that's just how I view the world. Right there is a kill zone. You also have another level in there too as well. You have the support here, then you have the gap fill. Now look what happened with the gap fill in here. You dropped right to that gap fill as well. So now you have this level in here that you are just not breaking, no matter how much we want to say that the market is, quote, supposed to break, how bad it is, the credit event, the 20-year, this, whatever else we want to pull out of the hat. All we care about is what's it doing. What it's doing is driving everybody crazy because you should have broke and you didn't. And everyone's trying to figure out why. Rule of thumb, just for FYI, see how your left shoulder is smaller than your right shoulder? Whenever the left shoulder is smaller than the right shoulder, the probability of this being a huge drop mitigates. So if this was lower than the left shoulder, the probability of this breaking is actually greater. Why? Just makes perfect sense if you really think about it. We went higher than we did over here, which means you have more buyers. Just a fancy way of pointing out the obvious. But you can actually go back and back test this and go and look at head and shoulders and see how much stronger if the right shoulder is weak versus a strong right shoulder versus a weak left shoulder. And you kind of just go back and back test it. You can go look at it yourself. I think what's critical is that you're holding in here. I think it's critical that you got over that 43.25, which was brutal the past couple days. I think also is what is critical is there is a massive collar with JP Morgan where they want this under 4,300 and they want it over 4,200. And it's not breaking. You have massive short gamma, which we've gone over before, and I'm going to drop that in. Now, this is something that we went through in the public pre-market. We went through it last night as well. If you're new here, you know that all these videos are connected, so you can actually chart what we're doing through the week. And you can see if we know what we're talking about or not. So dealers are short 3.5 billion of SPY gamma. Gamma is related to delta. It is the calculation on what percentage it's going to move. It's just the easiest way to explain it. Negative 3 billion. This is enormous. What are they betting? They're betting on the delta imploding. If the delta implodes, guess what? They make a killing. Guess what happens if the delta doesn't implode? They don't make a killing, they get killed. So what do they want to have happen? They want the market to drop. What happens when everybody's on one side of the boat? You're short more gamma here than when we had a global pandemic. You're short more gamma here than when you had a global pandemic. Are we still waiting for the credit event? What are we waiting for? Someone's going to explain the 2-year, 10-year curve to me again. When you start to see this stuff, you have to pay attention. What I think is just absolutely glaring, if you look at this level here, and then you go January, June, and you realize this was September, October of 22, and then you realize that this is the bottom, and we do something as simplistic as just say, geez, what's happened every time that we've been this low? Well, we only really have this one time to go through that. All right, well, what about here? What's happened every time we've been at the 2 billion line? That was a global pandemic and a meltdown when we had peak CPI. We'll get to it in a moment. So if we mark these times in the market, what has happened? I think that would be something very important for us to look at, something for us to drill into and say, hey, can we learn anything from that behavior? Let's drop this onto a weekly and see if we can learn anything from that behavior. And is that something that we can replicate? Let's clean this off real quick, and we're going to get my special arrow. And you can see right here is that peak. Here's the other peak. Here's that peak from here. So over all those times, those 3 times it's happened, are those short gamma. And we're not breaking, guys. As much as people want it to break and they want it to crack, and Everyone's waiting for some kind of event, and I'm not saying that there's not going to be. I find today's information and what's happening out there extremely difficult to read. When you have the dollar rallying the way it is, but the VIX is imploding, one of the things that we were just talking about here was just this beautiful that I refer to as a cup, and then people will say that's not a handle because it's not long enough. Some cups have short handles, guys, whether or not you like that or not. Sometimes they just do. We can clone that because that's what you're supposed to do. What we're going to do is go there, and we're going to hit the clone button, and we're going to drop that right there, and you can see that. So you'll be able to see that pretty easily and how that's playing out. You actually have the inverse right over here. So I think this is really important to note. I'm not saying we're going to hold. I'm just pointing out the obvious. If you watch Saturday's video, overall, we're still far from out of the woods. If we start looking at some of the larger metrics, we are not out of the woods by a long shot. What I am simply pointing out, and pointing out what I think is fairly obvious, is that we're due for some kind of bounce. But if you were to look at this, it is very difficult to say that you should be feeling warm and fuzzy about your long positions here. That's not what I'm saying. What I'm saying is the short that these guys put on, it's not working. Now, what could happen? You could bounce, reject the 55, and then roll right back over and not break that shoulder. That could happen. It is possible to bounce, fail, and roll back down. You are fighting the tape with a declining 55. I'm going to say that again so people get this. You are fighting the tape with a declining 55-day moving average. I use a 12, a 22, and a 55. You should use whatever you're comfortable with. So when I say this, I don't think it's irresponsible to think that we could bounce up to here. It's 3.5%. It doesn't mean that the great credit crisis that everybody is hoping for or thinking is going to happen is actually going to happen, but it also doesn't mean that it still doesn't happen if we just get up here and bounce off of this. And I think that's a really important distinction. The other thing that I would be looking at here, if I was someone that liked technical analysis and liked looking at divergences, do you think it's interesting that you took out the low here, made a lower low, and that the RSI didn't? And again, whether or not you believe in RSI divergences, to me, it's like believing in gravity. You can believe in it or not believe it, but neither one really cares. And here you are, and there it is. So we need to look at this and say, is this going to follow through? Now, it still has a lot of room to go to be a true divergence, but does this follow through or not? I don't know. But I know that you better be aware that you have this RSI starting to curl up. You are on that trend line that we just drew. You have two trend lines or support levels in here that you were unable to break. You're going in tomorrow into an area where PCE is probably going to be fairly muted. And if it's not, it's at 830. And if it's not muted and it's really high, we will have a problem and we will sell down. So that's why you saw some short covering today. What kind of short covering do you think you're going to see on a bullish PCE if we got one? What we do here is we don't predict. What we do is we try to assess different probabilities, right? We don't want to say that, oh, we're definitely going to come to here because quite frankly, we all know no one knows. But by assigning the probability of something that's going to happen, that allows us to make better decisions when something actually does happen because we've thought through the amount of scenarios that we can think of. That just makes sense, right? You might want to pay attention to that line and the fact that you can't break it. Almost looks like you just had a breakout and retest. Now, this is a lot of work to get through. It is a lot of work to fight a declining 55. And I'm going to be Captain Obvious here as well. You want to put yourself in a position here where you are taking profit. We had a fairly decent day today, actually a very good day today in the room. And the goal was just lock it in, lock it in. There's two things that I didn't lock in. I will definitely walk through one of them because it fits in with our stool strategy and people really need to get this and understand it. So what I would say focused on here, looking at the ES, come in tomorrow. You don't break that level. You need to pay attention to it. If you were on the pre-market call, and I'm going to say this, if you're not on the pre-market call, which is free, it's at 8:30. Let me rephrase that. It should start at 8:30. Sometimes it starts a little bit later if I'm grabbing a cup of coffee and just running a little behind, and I do apologize when that happens, but it does happen. And quite frankly, nobody wants me without coffee. But what you will notice, and what I've gone over ad nauseum in these meetings, it's very important, and there's a very important distinction here, and if you learn nothing else from this video, you're going to want to watch this. All the algorithms, when the data hits, they show their hand. What do I mean? They show where their high is within the first bar, and they show where their low is. And you want to mark that off. Now, if you were to do that, and you were to utilize that level, and you might want to listen to this again, you have an edge in the market. You are fighting for inches. Now, we marked off this level. Let's take out this one, and we all know what this is. That is that major level that we just pointed out that goes back a year. Does it get any clearer that that's something that you might want to pay attention to when the market opens? 930 hits, rejects. Goes back over 10, rejects the top of there. Pulls back, rejects. Rejects, rejects, rejects. This is what we were looking at today to make a decision if we were going to go long or not. That's what we were looking at right in here. Should we go long? Should we not go long? We have a plan when we come in, just so you should have the same plan. We're not going long heavy. We might play around down here, and we did. We bought some workday, some things like that, but we're not going heavy to this clears. Until I know that algorithm or high frequency trading firm is done there with their selling, and you can see how they fought it the whole way. Until they're done, we're not going long. Once that happened, pick a stock. Doesn't really matter what name you're going to pick after that happened. Okay, I mean, look, what happened here at 11:14? What happened here? And start going through it. I mean, it gets pretty obvious. Okay, 11:22. I mean, it's not rocket science. So you want to pay attention to what I just went over. If you look at the NQ and do the same exact thing, you'll see this. Again, these videos are raw, and that's why you're seeing no cuts. See that mark right there? What do you think we were watching all day? Play out. Comes down, tries to get through, can't, tries again. That's the major support. This is the algo. Flips, retest the algo, battle, breaks out at 11:22. I wonder what happened at 11:22 today. And you start going through these, and you'll start to see movement around when? Around that 11:22. They all start breaking out. You have one big trade on right now, guys. What do I mean by that? Everybody's short that gamma. It's one big trade. You can literally pick what you want off that trade. Just find the one that's going to move up the most. For us, it was SMCI. That was the one that made the most sense. That was the one that we bought. It clearly made the most sense. You can actually see the mark here at 10:30. You can see the mark here at 11. When did it start really lifting? And we bought this right off the open because we knew that this was the one. We just had it lined up from the night before, and I'll show you the chart. I'm not going to get into all the timestamps because there were a ton of trades today, but this was really very simple. I actually took a loss on this the day before because I just didn't want to hold it overnight in this kind of market, but you got right to this level and you were able to hold it and stay over it. Made $10 on it today. It was a beautiful trade. Just kept working our way up on it over and over again. Question is, what do you do with it now? I'd watch this tomorrow, and you start looking at these names and going, well, where can we get to? Get up to here, you could get to 300 fairly quickly here with this name. I would not roll this out. I'm going to clean this off, but I would not roll this out. You see this right here? Double bottoms, people think they happen on the bottom of a chart. Double bottoms happen when? They happen when they happen. They happen where you're at. So you can have a double bottom right here on a chart. It doesn't have to be this 52-week to be a double bottom. There's your undercut. What happens if you break this? Where are you going? 350. You think you might want to try to see if it holds this level? So that's what we did today. But you have a lot of nonsense in here. A lot. That said, you triggered another short-term buy signal today. We're up about $2 after hours. The Nike news is getting people up and getting people excited. And quite frankly, if PCE comes in tomorrow, I think they squeeze them. You never know how this is going to go, and you don't know what kind of pressure is going to come from the investment banks tomorrow trying to save their collar, but it is what it is. But look at that 22, and this is always what I focus on. I always focus on what exactly is happening and has anything changed. You have not been able to get above there for 2 weeks. 2 weeks, you cannot get above the 22. I use a 12, a 22, and a 55. You should use what you're comfortable with. Here I am closing right above that. Maybe that's something you want to pay attention to. Here's the control bar that got us the whole way down. What we're doing, we're flipping, right? Something to think about, okay? Something to pay attention to. I personally am completely out of this. I know some people carried it overnight that were in the room. I just locked it in. I carried a lot overnight, more than I really wanted to, candidly, with some of the new ads we did today. But if I look at this, then I don't know how you don't think you have a shot at 296. I figured you were going to go to 268. There are the levels that we looked at, but that's setting up. I mean, there's a lot setting up here if you really look at this chart. Here's your 50 on the RSI. You're back over here. You're 4 days in a row. You've broken that downtrend. You've filled all that in. You've broken above the control bar. Probably don't want to rule this out tomorrow. Overlay that, and then you throw in the 50, you just want to look at some of the other stuff. I would look at the 55 and realize that you might hit a wall there. That could be an issue tomorrow. 280 could be an issue. You might want to remember some of these levels, and you are above the 12 again. So when was the last time you were above the 12 and the 22? Well, it's been a while, guys. If you want to pick both of them, you'd have to go out to the 8th of September before you're up in both of them. And the other thing I always do is I always look at these first before we even get involved. And what we saw earlier in this week, and this is one of the reasons why I got involved, was we were above the 3. The 3 is green, the 5 is yellow, and the 8 is red. And we started getting above these, and then I just start getting confirmation left and right in here, and we're holding, trying to rally. And I took a $2 or $3 loss earlier in the week because I just didn't want the risk overnight. But you start having these crosses, you want to pay attention to them. You start getting a 5-8 cross to the upside, you probably want to pay attention to that, at least in the short term. So I would not rule these names out. I would stay and focus on the bigger guys out there right now. I really would. And I would run a really simple scan. I'll tell you exactly what I would run. I would be going through every stock, whether you use a 50 or a 55, and I would just run who's above the 50, who's above the 55, who's got an incline sloping up 200-day moving average. That's where I would start everything right now. Why would I start there? I'll tell you exactly why I start there. Number one thing on Goldman's institutional desk, they come out with 10 charts every day. The number one chart they were showing yesterday was, where are we with stocks above the 50-day moving average? Now, I'm going to take these lines off and just show you this. I've been hammering this since Saturday, telling you to watch this level. Okay, there's a reason why I tell you to look at these charts. And this is S5FI. You can pull this up on TradingView yourself for free. Right here's the symbol, TradingView. You don't even need an account. You can just pull this up. It's very nice of them, actually. Whenever you get a 90, you usually get something down here. Before, this would be when every stock's at like a 90% reading, and that's not going to last, and neither is this. These are areas. Look at that, October 22nd. I wonder what happened there. I think the market might have bounced. So you want to look at this and say, do we have some data that might point to an area that could possibly be a bounce? Please listen to all those words before you come out and tell me I am bullish. So if you look here, this is the same scenario that you have here. What else do you have here? Negative gamma. Same level of negative gamma. We're actually more negative gamma here. Something to think about, right? Okay. So you have that, and if you want to go back to 22 and you look at that area too, isn't that interesting? All right. But very different scenario. So we look at this and we look at where we're at, and we should bounce off here. So why do I care about this if I'm looking at Google? Because, or if I'm looking at Meta, it doesn't really matter. 19% of all stocks are above. So anything that's above is doing better than average. Okay? So right there, you have an edge on Meta because you're above. So maybe you want to run a scan on stocks that you're interested in that are above the 50-day moving average, because 80% of them right now are not, which means instead of looking up someone's relative strength scan, you just ran your own. Okay? That's how you run one, just how we just did that. So, and that's exactly what you want. All right, so that might be something that you would look at. Now, other big names, I think we should go through them. You're not really making a ton of progress here on XLK, are you? Apple's trying to get back through that major level. Maybe it will, maybe it won't. If I'm to look at this, there's some real stuff that has to happen there. Let's get rid of these earnings. But there's some real stuff that has to happen there. That really has to develop. I don't know that would be the one that I'd be rushing into. This is sloping. There's a lot of negative news out there. Watch how that plays out. I don't know that this would be the one that I'd be jumping into either. Doesn't mean they go down, but I just don't know that that's where I want to be right now. I think that where you want to be, either long or short, is if there's some kind of play out there. For example, to me, if I look at Netflix, you just had the writer's strike essentially wrap up. Now you still have the actors that are out there, and I can't even rally. You're not even able to rally. Look at that. You can't even go anywhere. And that's a problem. You've got good news and you're unable to even get anywhere. You come here to the gap and look at the gap. You're through it. Now you have this doji. You better not break that doji or you're going to have real problems there. And left shoulder, head, right shoulder. We all say it. And you look at NVIDIA, and NVIDIA held. You can say anything you want about it. Right? I mean, I'm sure we've all heard it at this point. But you look at this, and I want to just point this out. This is your first close back into your channel. And you're going to want to pay attention to that. I think that's a really big deal. And you have 3 to 5 days, 1, 2, 3, 4, 5 to get above it. And there you are. Now, you want to be above it 3 to 5 days, or if you break it again, then all bets are off. But me to look at this, it is very difficult to not be a little bullish on it. And then you start dropping into like a 15-minute and you start looking at this going, well, they're all lined up, or they're certainly getting all lined up. You know, you want the 3 on the bottom, the 5 in the middle, and then the 8 up. You want them lined perfectly, the exact inverse of what you have here, right? So that's how you want them. So you really want the 3 up top, 5, then 8. That's how you want it. So what's happening here? You're crossing. You're crossing. You're pointing up. When was the last time that happened? Well, it really didn't happen in September, did it? We've been straight down. You might want to pay attention to this tomorrow. I thought this was fascinating. And they sure played with you today. They sure didn't want you in that, did they? They sure kept trying to break it out and then bring it back down, drop it $2. Just the old shake and bake, really. You can just see what's happening here. I would not sleep on this. I would be paying very close attention to this. I would be very close attention to SOXL and what's going on here. Are you going to get through? Are you not? We're looking for bounces. We're not saying that we're just going to go take out the highs. This is a very different conversation. You should have picked that up, hopefully, when I went through the indexes and what I said there. Just please understand that I'm looking for bounce plays to certain levels, most likely to retests of something as simplistic as a 55. That's all I'm really looking for. Can I get to 450? I don't think I'm going to hit 450 tomorrow and miraculously blow through a 2255 cross, but I do think that I could bounce up there. I do think that you can see that tomorrow, especially with the amount of gamma that's short out there. Could it happen? Yeah. A lot of it's dependent on the numbers that come out at 8:30, but good numbers, people are going to wonder what they shorted. And here we are fighting 248 on Tesla again. I'd watch that. Amazon, no love. My personal opinion on Amazon is it's dead money until people get a handle on what's going to happen with the FTC and how that's going to play out. But you just don't know. And I think that's something that we have to pay attention to. There's two names we're definitely going to go over tonight. This workday, this was a trade that we did in the community. I'm not going to walk through this. I want to show you Nike because Nike is something that you can implement immediately and do yourself. But what we were watching was this trade, and it was a real simple trade. You can see where we're at right here. Measure the bar down 50%, so we know that we never broke the 50 of the initial break. And then we just kind of got in, traded up, and then we saw Wick City up here. Once you saw Wick City and you see that this bar can't get through, you start trimming into this, you drill into that bar and find a spot to get out, and then we just used the rest here and just closed it and wrapped it up, called it a day. Decent trade. Have to see what's going to happen tomorrow. You notice I'm not spending a lot of time talking about the VIX and the VIX dropping. I'm not spending a lot of time talking about what else. I'm not talking about the treasuries. Right? There's very little to say here. They're going to go up or down. The bottom line is someone's going to tell me that they've peaked. I don't know that. All I know is this is where we're at. All I know is that the VIX did not get above 20 and we pulled back today. All I know is that the dollar stopped going up today and the markets rallied, getting through a critical level. That's what I know, right? I don't want to talk about the dollar is going to go here because Japan's going to do this. There are times for macro and there are times to simply get through Friday, right? That's why we have the stool. And that's a great example of what we're going to get into here in a moment. So if you take a look at Nike, and I'll show you the most profitable trade that we had today in a moment here and how you can do it as well. But if you take a look at Nike, this is really interesting. So here we are, we have data out, good econ data today that kept the market afloat. And then we have good data by them this evening. Whether you think it's good data or not, it's irrelevant. The market did. That's what matters, not your opinion. So if you look at this, here's your breakout bar. So always look at that first 5-minute breakout bar. And we want to get involved on that breakout bar. And then the other thing that you want to do as a trader, I'll clean it off and I'll show you. You want to trade after hours. The number one thing you've got to get comfortable doing is dropping an anchored VWAP on the first 5-minute and 1-minute bar that happens. And understand where all the players are, all the algorithms, all the high frequency traders. Remember, you have to look for an edge. You're not an institution. So you have to figure out what the institutions are doing. They're the ones that are in control of this, not you. So you have to figure out where they are and then how you can benefit. We know that you have a high frequency trader that's at this level and and algorithms obviously, and that's at this level. That's what you know. That's how far down they could get it. That's how far up they could get it. Once it makes a decision, that's it. And they always do these undercuts to test your resolve. And then guess what? Then they rip. Sometimes they don't just test your resolve. Sometimes they just bust through. That's why you need the VWAP as your stop. Now, what I was looking for was this pullback, a retest of this line. I don't like to buy these. So I was waiting for something like there, broke down a little bit. And in this area, I bought it up, down. Why am I not getting stopped out using this line? Because I know that they know that line's there. It's after hours, so they can manipulate it a little bit better. I want to use the VWAP. You want my money? Close 5 minutes below the VWAP and you'll get my money. Other than that, there's no stop loss for me after hours with this kind of nonsense. You see it right here. This is what we were doing. This is some of the other things that we were looking at. But if you look right here, long Nike after hours, so I just posted so everyone knows what I'm doing. After hours, I do trade as well. I try not to do too many quote alerts after hours because if you can't trade during the market hours, you sure shouldn't be looking at after hours or pre-market, different game. And then I'm just watching it go. I'm watching level 2 and I saw you had a seller there, and you'll see as soon as you clean up that seller, we moved 938, 538. We'll pull it up in a minute, and then you can see we're trimming there, getting out 97, and then it did what I wanted to do at 555, and we got out of the way. Why is this important? A couple things. Number one, what I saw that we were starting to have an issue. So once I saw that we started to have an issue on level 2, I want to clean that issue up. I want to make sure that that issue gets cleared up. We start running up. Right here, I saw an issue. You can see it. You have this red bar, starts giving us a little bit of a problem, and I could see a huge seller out there. And once you see the seller who's sitting on the ask, once they clean them up, if you're looking at level 2, once they clean them up, that's it. Right? And I can actually do a video on that. If you're interested in me doing a video on level 2, just comment below and I'll start working it into these so you can start learning how to do this yourself. So here you are, and go from there. And I do appreciate you guys sharing all these videos, sharing the commenting on it. It's helping me greatly. I don't have to run ads in the middle of these for the algos. So, so that they show them. So I do appreciate that. Now, here you are, and you're running up, breaks out. Now, I'm trading off of 5, but I wanted to watch this action, so I'm watching it. And then all I'm doing for the rest of the trade is realizing that this probably is not going to last, although it looks pretty good right now, doesn't it? But we're actually at a little higher. And so we're watching the push, the push, the push. And then all of a sudden, what happened? Okay? All of a sudden, right in here, we're pushing, and then I start going sideways. Well, I'm just watching this and I'm reading the tape, and I can start looking at the level 2 and start seeing them hitting the bid, and they're hitting the bid. And so I'm looking going, okay, well, I'm in here. What am I doing? Right? It's after hours. What's going on? So I start getting a little nervous, and I trim, and that's where you saw that timestamp. And then I got my first red bar down, and I don't close above the open of that bar. Do you see, like they used to say on Sesame Street, one of these kids is doing its own thing. See how this bar is red and these are all green? 5-minute chart, that's enough. I don't need this. So as soon as this happens, I'm like, yeah, I'm not going to wait, see if we're going to hold the wick, get caught in something. I'm out. Clean the trade out, and that was it. So that's how you can trade after hours. You may want to watch that again. You're using the VWAP as your stop. You're watching these demarcation lines off a 5-minute, very similar to what I just showed you how to do on an 8:30. Okay, you are the remora. They are the sharks. Understand your role. If you do, you can profit from it. Comes back, they're always going to test you. They're always going to test you, especially pre-market and after hours, because they can manipulate you more. Why? Because they don't have all the institutional order flow. They only have certain people that they're playing with at these levels. So I hope that was helpful. What does Nike do tomorrow? I have absolutely no idea. It's probably one of the least stocks that I'm very interested in trading tomorrow, but it's probably going to be pretty active. I'm more interested in the tech names. Now, the other thing that I really want people to get, and we did this trade today, people will look at this and go, oh, you're late. We were of a group that could have got in earlier. Yes. Does that mean that the trade's busted? No. Let's walk through that. Could we have gotten in this earlier? Sure, we could have gotten in this earlier, but we were pretty busy yesterday. So we come in today and we're looking at this and we want to short. So we short right in here, and you can see these right here. So when John types this stuff out in the observations when I'm trading live, you can see AT is short, you can see the timestamp there, and then you just see this is where we're long work day, and then if you don't want, you just pull it down on the way out, you can see we're long SMCI here. So you see these. I like showing the timestamps. You're welcome to comment on it, but at least it shows that we actually are in these trades and I am calling them out. This was not a technical trade. It was a technical entry, but the trade itself was not based upon that. It was based upon the stool. For those that don't know, I always look at things from a 3-pronged perspective. That's how the world works for me. And I'm on a different computer and I don't have that stool that somebody made for us. So we're going to have to go old school with the stool. And this is the top of the stool. There is a macro view of the market that you must look at, i.e. GDP. There is a fundamental, is the company making money? There is a technical chart. Are we up above or below certain mechanics that make me want to act? Here we are. Here's the break. Once we broke here, we were trading other names. You saw that on the timestamps. So I wasn't focused on this. So I break here. So my entry is not optimal. So my stop needs to be tighter. That becomes my stop. We enter. It breaks. That's it. Trade's on. Now, why was I comfortable with this? Why am I doing this one, which we did really well with, made about $4 or $5 on the short, and I'm still short this? Because we understood the fundamentals. This is the partners fund up here, the LP. This is the one that gets dividend. Now, people are saying, oh, they cut the dividend by 50%. That's not what they said. Now, NEP is the limited partnership of NE, which had some issues yesterday on the growth side. What people are saying is, oh, they're going to cut their dividend. That's not what they said. You need to actually understand fundamental analysis. And this is the one thing I try to stress with everybody and my fancy stool. You have to understand this. NEP recently announced reduction in its cash distribution per unit growth rate. The growth rate in which you're going to get a dividend. And the dividend is predicated upon NE. Now, NE, N-E-E, is down considerably. You know that. So how much growth do they have right now? Not a lot. But what they're saying is, despite the fact that NEE is having problems, and despite that feeds this yield, and this has nothing else going for it except that yield, they are not only doing that, they are cutting 50% of the guided range from 12 to 15% annually. Okay, so in other words, The reduction is in the distribution growth rate. So if they were getting $1 before on the dollar that was earned, that type of growth is gone. So let's say they were getting $1 before. Now they're getting 50% on what NEE was earning, okay? Or earning rather. That's not what they're doing now. So even if it stayed the same and it didn't, knees dropping, that's why the stock went down. This is saying that when they make less, you're still going to get less of that. There's a situation here, candidly, where they don't get a dividend. And I think that kind of stuff is going to start sinking in here. You don't start here. You don't start doing this. And you're not going to get this unless you understand fundamental analysis and what they just said. Now, if you look at NE, and you'll see that, oh, that dropped too. Yes, it did drop today. And it dropped fairly decently. But we dropped way more, and NEP is in way more trouble. Right? NEE has assets. NEP has a dividend that just went away. If you look at this, you're not even down to these pandemic levels yet, which is probably where you're going to get to. So I do want to just really hammer this home. I think there's way more pain in this, unless they really come out and clarify and saying, oh no, we're going to be able to pay X. And I don't see how they're going to be able to say that after what they just did, what the company just announced. So when you look at this should continue to drop, and people are not going to be comfortable. It doesn't really matter who you are. You remember this with IEP. It doesn't matter who you are. They had a 40-year track record of always paying this dividend, and everybody loved them, and they stuck with them, and we were going to ride it to the end, and then he cut the dividend. And the moment you cut the dividend, you're done, because people rely on that dividend. So what are you going to do? Hope that one day they raise the dividend again? No. What they do with dividend, and there's no quicker way to lose money than chase yield, but what they do with the dividend is once they know that they can't rely on the dividend, they just blow the stock out and they move on. So I would watch this. I think it can get a lot worse. Remember, PCE tomorrow, 8:30. That's it.